It's part of a historic mission to vaccinate more than 100 million people by the end of March, with 145 sites in the United States poised to receive the vaccine today, and nearly 500 locations set to get their first doses on Tuesday and Wednesday. As the market slowly creeps up here, again, keep your stop in no matter what. Bonds, I don't know why there's such a big gap there. They did not trade like with a big gap, so kind of ignore the bond chart there as far as that gap is concerned, because I don't think that did not happen. I don't know why the charting system is creating that little area there that so don't look at the chart there. That it's really not giving us too much information as far as bonds are concerned. If they are going down, that is the only information it is giving us that's correct. 5 of the first vaccinations will take place at national ceremony kickoff events scheduled for this afternoon at George Washington University Hospital. Despite dry runs and contingency planning, a lot can go wrong. Everything has to come together: the packaging, the dry ice, the vials, the materials itself. It all has to come together at the same place and have enough of it, exactly the right people ready to take it, said the director of transportation and logic. So as we come back down here to the 85 again, if you didn't get out there, hopefully you just kind of giving you a chance here to scratch a couple of them if you still have multiple contracts on, and that way we don't sometimes a scratch is a trade. Market is nice enough to give us a little scratch sometimes. It was a very nice trade there. Steve, some of you got long there, going up here to the pivot, so it's very nice. I mean, long from the pivot coming up here to the first level. So a nice little opportunity there for some of you if you took it. A couple of you have. And now we're coming up here again. If you are, if you did sell them, maybe you scratch a couple of them and then see what it wants to do, lighten the lows, so to speak, only because we just got a right touch to 87 area and come back down. Wasn't really flying anywhere, so hopefully you were able to stay with it and at least scratch some of it, or maybe all of it, depending on how much you're trading, how many contracts you're trading. Everybody trades different levels, so different amount of contracts. So, we hopefully did not get stopped out, and we are able to scratch some of it against the 85. All right, let's see. According to official guidelines from the CDC, healthcare workers should be the first to get the Pfizer vaccine alongside people that live and work in long-term care. That group consists of 24 million Americans, which will take up most of the doses that will be produced by the end of the year, by the end of 2 weeks. The goal is the rest of the U.S. population to be vaccinated by the summer of 2021, though some hurdles remain. The logistics hurdles mentioned above, plus roughly 4 in 10 Americans say that they would definitely or probably not get a vaccine, according to the recent survey. To achieve herd immunity, experts say that 70% of the population needs to be vaccinated or have natural antibodies. So there you have it. Everybody's talking about vaccine. More talk. Hopes for continuing economic recovery. So cyclicals lead the advances in the futures overnight as the U.S. Gears up for historic vaccine rollout. And Dow and the S&Ps and the NASDAQ are all up. The vaccine has and will likely continue to provide a tailwind to the market, and that is allowing investors to look beyond record case levels, hospitalizations, and deaths, said the JP Morgan analyst, as market continues to uptick here. Next level on the that we have as resistance is up here at the 92 area. On the stimulus front, bipartisan group of lawmakers is ready is readying a two-part proposal with $908 billion in pandemic relief, though disagreement remains between two parties over liability protection for businesses and funding state and local governments. The best chance of a bill passing would be to attach it to a 12-bill omnibus package Congress must pass by Friday to fund the federal government. It's a big week. The Federal Reserve will also be holding its final meeting of 220 on Tuesday and Wednesday. Oh, good. Gosh, an F day on Wednesday. Beautiful. Final meeting of the year. With any guidance on continued asset purchases watched closely by Wall Street. So they're not worried about anything but, how much are they continue to purchase bonds, because that's the only way to, well, that's what they're doing to help. And they've said many time that they need help from the fiscal side, not only the treasury side. We'll see what happens for the market to continue to this rally, but the market is optimistic. As you can see here, we're almost at the highs. So we'll see if that does happen. Again, hopefully we're able to scratch some. That way we don't get stopped out up there. And now it goes. If you have any left over, market coming down here just a little bit. Again, everybody trades a little bit differently. We don't expect you to hold them, all of them. We don't expect you to trade multiple contracts. Everybody trades differently. Some people scale in differently. Some people just trade one lots, two lots, depending on what your risk tolerances are. And, that's fine. You just have to adjust your risk tolerance to the market, what it's telling you, how you get in, and then how you get out. Some trades are easy. They don't require a lot of managing, so to speak. Other trades, you have to work a little bit, like this trade where we talked about, where we got up to almost getting stopped out and came back down to the level where we suggested you scratch a little bit, so that way you lessen the risk or even get out of your trade, right? And then they came back up here and pushed the 88 area. So, everybody trades just a little bit differently. That's why when people ask me, how do you do? What's your stats? How's that? If I traded a 4 lot and I scratched 3 of them and left 1, and then when it came back down here again, I made a little bit of money on it. Is that a good trade or a bad trade? I don't know. I don't know how you quantify it. Or maybe I took a loss on one and made a little bit on the other. Everybody's a little bit different. That's why we work trades here. This is a business where everybody does things a little bit differently. There's not one right way or wrong way to do it. You just have to find the proper level that makes you happy, right? And that's why we talk about different ways of entering trades, different ways of getting out of them, different concepts of scratching, not scratching. All these things come into play when you are trading. And sometimes, like I said, sometimes the levels, you got to work them a little bit. They're not straightforward, and the market gives you a chance to scratch, right? That's what the market did today, just now. So this is why. That's right. That's why it's called price action trading. So yeah, but the point is that the markets, do give you opportunities sometimes to work a trade instead of, sometimes it's very easy. Sometimes we go to a level and bounces off, gives us a little opportunity, boom, boom, and we can be happy. But right now we work this one, so that's fine. So again, if anybody has any questions, please feel free to ask. Put them in the chat box area, and I'll be able to see it there as I have that window up. And I appreciate questions, especially when things are slow, and things are relatively slow, even though we're a lot higher, but we gapped a little bit higher. And now the market's trying to just, see how happy it is in regards to this, COVID vaccine situation. And then if if you get some rumblings from Washington in regards to any kind of agreement, with uh, the stimulus package is going to come out of Washington agreement. Be nice if they do come up with something, but if they do, that's going to definitely add some momentum to the market. And so be aware that those things might be happening. The market tries to anticipate, it's like you buy the rumor and sell the fact. Kind of, you ever heard of that phrase where, the market anticipates a move one way or the other based on likely information. So, every time you hear some good news and then, the market goes down when everybody's expecting the market to go up, that's because the market already anticipated that move, and people are just taking their profits in regards to that move. So, what does that mean? He's waiting for final confirmation of the election. What confirmation is he looking for? What's he waiting for? I mean, electoral college, like what's going to happen? So it's today. It's going to happen today. Like it wasn't like going 0 for or 1 for 60 in the courts was not confirmation. I don't know what confirmation are we talking about. At what point is it going to be confirmed that Trump lost? I'm just wondering out loud because I don't understand what that means. But hey, that's the excuse that he's giving anyway. I don't think. Listen, I don't think he's waiting for any electoral college to tell him anything. He's just a stubborn old man, and they have to come up with some kind of solution this week because they want to go on vacation. I mean, they want to have their winter break, or I should say Christmas break, going into the holidays, and they didn't want to get out of it. I mean, you're talking about the laziest people in the world are right there, and they always wait till the last minute to come up with any kind of solution for the budget. And this is a budget thing. It's not even like forget about the COVID thing. They need to come up with a budget to keep the government running. So we'll see. We'll see if they use that as an excuse to get a deal done here. The fact that if you say so, that they were waiting for final confirmation of the election, which is supposed to happen today, by the way. In case all of a sudden these are like ceremonial things that nobody's even heard of before. And now everybody hears about them. Electoral. They meet today to confirm the election results that all the states have certified. These are all of a sudden become like thrown into the limelight as like big deals. They're really not big deals, but the environment that we are in had made them become a big deal. But the reality of it is they're not really big deals. But it is what it is. So we'll see. But again, the market anticipates that there's going to be some kind of vaccine situation, and this is why we are getting a little bit of a rally here. And the next, obviously, the next thing that the market might be anticipating is the completion of some kind of stimulus package to the economy with regards to the COVID relief here, which, if you looked at the Fed governor, not the governors, but the Fed chair, Powell said that they'll do whatever they can on the fiscal side, on the financial treasury side, but they need fiscal help from the government to aid so that the economy doesn't slump. Uh, yeah, I don't know. Yeah, they could try, but again, even on January 5th last, the vote of the electronic that is accepted by Congress, you need to have both sides, both houses of Congress accepting those results. Not accepting those results. Okay, so uh, with the House being still on the Democratic side, that's also a mute situation. I mean, so yeah, I don't know why. I mean, I have no idea why. Yeah, but we'll see. See what happens. I mean, the I don't know. No idea. No idea. But anyway, but again, it doesn't matter about well, 81 million vote, 80 million or 85, whatever, voted the other way. So I mean, what are you? What are you going to look at those people and say that they don't count either? I mean, everybody said, oh, 70 million voted for him. Well, 80 million voted for the other guy. So what's the difference? Yeah, I understand. But not all of those 70 million are agreeing with this situation. I mean, you do have a group of them that believe that, but I can't imagine all 70 million are okay with what's going on. Look, even the Republicans, not all the Republicans in the House voted, signed on to that bill or some statement with regards to the Supreme Court decision on Friday, right? Even all of them didn't even jump on. Well, at some point, and why is that happening? Why is it? Why was he cheated? Well, why do you think they believe it? I should just saw it on the internet. Exactly. Exactly. There. That's all you need to say. That's all you need to say. Yeah, they saw it on the internet. Let's just believe everything we read. That's true, by the way. They did see it on the internet or listen to somebody talk about it. The best part is that he got $200 million in 1 month after the election. That's impressive. That is impressive. Just to continue to fight. All right. All right there, Don. How you doing down there in Texas these days? How's the weather? Nice, calm, serene. The market's just kind of hanging up here. What's gold for you? We had a little snow here. Did you get snow? No, probably not. Below 50. Oh, I wish it was 50 here. I'd be on the golf course. It's freezing here. 20s. Chilly. Yeah, the folks in California want to know what is snow. All right. Go to the fridge, take an ice cube, get a grater, just Put the ice cube over the grate and see what like falls down. And that's kind of snow. What's a grater? All right. Well, we'll stop talking since nothing. Well, look, as you can tell, you get to this point where uh, nothing's happening, and we start talking about snow and nothing else. Yeah, Don suggested that what is snow? He said frozen sand. How's that? That's a good way of describing snow. And of course, trend day. Yeah, maybe for the time being. Could you have gotten long anywhere? Some have gotten long right above the 82 area. Was probably a little bit of an area to get long. Next level on the upside we have is 92, so a little bit of resistance. Could you have bought it here? We're flagging up here a little bit, so maybe if you wanted to buy a little bit of a dip down to the 84 area, 85, you can see if you get down below 83, you probably want to be out of any longs. It's a trend day until it's not, right? So just patience is important. Like I said, at least the first level, we had an opportunity to scratch a trade. So now we're just kind of hanging up here against it, holding that level, that 84. So multi-federal government agencies, including the U.S. Treasury and Commerce Departments, have reportedly had some kind of their networks breached as part of a global cyber espionage campaign believed to be the work of the Russian government. Staff emails were monitored for months, though the full scope of the hack isn't yet clear. Sources told Reuters that the breaches were related to a broad campaign that also involves recently disclosed hack of FireEye, while a Washington Post report suggested the agencies were breached through a network management system called SolarWinds. The U.S. government is aware of these reports and are taking all necessary steps to identify and remedy any possible issues related to the situation, said National Security Council spokesperson. It's not good. It's not good. We're just slowly hanging out there on the highs again. If you wanted to get long, anything below 82 out of any long, so gonna find your entry point someplace. If not, and look for the 92 here is a little bit of resistance. In an unsurprising turn of events, UK Prime Minister Boris Johnson, European Commission, the EU President, agreed on Sunday to push Brexit talks beyond the latest deadline, sending sterling up 1.6% against the US dollar. Despite the exhaustive almost a year of negotiation, despite the fact that the deadlines have been missed over and over, we think it's possible that at this point to go the extra mile, the two said in a joint statement after they spoke on the phone. Meanwhile, investors continue to dump UK investments on fears Britain may crash out of its Brexit transition period without a trade deal in place. UK equity funds have bled $2.4 billion over the last 2 months. All right, we'll see what happens there, right? Market is kind of hanging up there. Again, 92 area, a little resistance. Just kind of hanging up here. Okay, just kind of coming up here to 90. Again, anything below, I know it's kind of a long, to get along, you probably need a little bit of a break down to the 84-ish area, and anything below 82 out of any longs, but probably not happening right away. So we got the next level up here. Resistance is the 93, 92 area. See how that works out. Again, we don't believe in just jumping into the middle of someplace just to buy it because we see the market going up. We wait for the opportunity. Sometimes it presents itself, sometimes it doesn't. That's okay. We need reasons to trade, not just willy-nilly go out there and trade for no reason. So we've got resistance up here at 92. We'll try that level and then see what happens if it gives us a chance. And if we're trying to get long, we've been a little bit below that. All right, good job there, Robert B. Oh, you're out of here. Nice. Good job. All right, market is kind of just hanging up here on the highs. Again, we have no numbers coming out, so this is just trading on the news of the vaccine and the possible news of a maybe some kind of agreement in Washington in regards to some kind of agreement on. I'm not saying it's happening. I'm just saying maybe. But the combination of both is adding to the push up here. And we have 92, got up to 90 and a half here, and just kind of, 90, just kind of hanging. So we'll look for the 92 area. If it wants to get there. And we'll come up here to 91, just kind of hanging up here a little bit. Nice trade there, Steve. All right, we got up here to 91 and then come off a little bit. It's kind of annoying, but it is what it is. So we just have to be patient. Support will be back around the 84 area. Shares of Virgin Galactic opened up lower by 14% in pre-market trade after a highly anticipated weekend test flight ended prematurely as the engines of the Spaceship Two vehicle Unity did not fully ignite. The spaceflight attempted was the company's first vehicle in nearly 22 months. With the previous mission reaching an altitude of 90 kilometers on the test flight from the Mojave Desert in California. It was also the first of 3 remaining space flight tests the company plans to conduct to complete development of a spacecraft system that looks to usher in a new era in space tourism. Virgin Galactic has about 600 customers and a reservation on its books, most of which have sold at a price of $200K to $250K per ticket several years ago. Don, are you one of the first guys that signed up for this one? Another 400 expressed an interest in booking tickets to the edge of space when sales fully reopen in 2021. Wow. All right, well, we're just kind of hanging up here against the upper level resistance. 92 areas what we have. If you going to adjust a little bit, you could. You missed it, Don. Wow, I thought you signed up for that. I thought that was you were the first person on that list to go up to space. Come, it's got to be like an hour ride, right? For 600 grand, 250 grand. Figured you'd be the first guy to jump on that one. They'll probably drop you off right on your estate someplace on the way back home. But hey, it's okay. Oh, that's so nice. You'd rather go to Chicago. Who would you visit when you come to Chicago? But, it gets a little chilly here. I don't blame you for going to visit the Bulls. I'll tell you, I'd do the same thing. But boy, they are terrible this year too, man. All right, we're just kind of hanging here. Again, we suggested 84 support area. Anything below the 82 out of any longs. If you are, if you're trying to find a reason to buy it someplace, bottom of the value. Did the markets create it? It's been kind of a quiet morning. Had one initial push. Then up to our 85 area, which didn't really work out for us. We had to, the best we could have done probably was scratch it, or at least lighten the load. And we really didn't have really a chance to make any money on that, but we didn't get stopped out either. The market got hung there for a bit, gave us a chance to get out of it, and and then proceeded to just kind of hang up here at these highs, and then teasing us here by coming up to 91 instead of 92. And now we're just kind of hanging up here. Again, very quiet day. The volume is very, very light-ish. It's on the lightish side, even though we're a lot higher. And again, the reason we're a lot higher is because of the vaccine distribution over the weekend. When I traded in the bond pit, could you go over to the S&P pit and also trade? Well, first, initially, when I was trading in the bond pit, the S&P pit was actually in another building, about a half a mile away. And then they merged the two, the Merc and the Board of Trade. And then at that point, since they still had, they still kept their seat priorities the same, even though we were merged. They didn't combine their seats into one. So you need to have a special seat to go and trade the in the S&P pit. I didn't have that seat. So yeah, so because when they merged over, you needed to have like a merc seat to go in there and trade that is, So no, the question is, answer is no. I didn't trade the S&P pit only because I couldn't go in there and trade it. But and look, when you walk into a pit, I mean, it's kind of no, I don't know, nervous. I mean, look, when I first walked in, I was like, I've, you know, and trying to keep this clean. I could have easily it scared the crap out of me. Let's put it that way. And then you get used to walking in, and you get used to it, and then okay, maybe you understand what's going on. Okay, that's good. So after a while, you finally get situated and you know what's happening. So then then when you go into another pit, if I went to another pit to either talk to a friend of mine or that I could trade and see him, if I actually stood there and wanted to trade, I probably wouldn't get too many trades off because people don't know who I was. I mean, I'm talking to my friend, so it gives me a little legitimacy. But if I just walked into a pit and started trading and nobody knew me, I'd be a little bit worried about or weary about me in there, trading. And then some of these guys talk to you, so it's not that you can just go into any pit and start trading right away. And other traders then give you a hard time because you didn't know what you were doing. No, they would love it. They would love it if I didn't know what I was doing because they would like, so they would just take it all. Are you kidding? They want me to not know what I was doing. The question is, would I go into another pit and start trading, not knowing what I'm doing, and just trade for the hell of it? Probably not. I mean, you're gonna give up a lot at the beginning to get respect from everybody. How's that? And since I didn't trade the pit consent, and bond pit, everybody knew me, and it was different. But you go into another pit and start trading, and if you don't know what you're doing, they love it. They'll take advantage of you for sure. Like whenever time like a new person came into a bond pit and started trading, I'd feel really bad for them because I remember the first day that I started trading and walked in there and how you still get that feeling of wow, this is what the hell's going on here. And if really a new person who had no idea, doesn't know what he's doing, or has some idea but doesn't really, I really felt bad for them. I'd try to help them out, but that was just me. Not everybody else would be out for blood. And the vultures would be out, believe me. And there were a couple of guys that came in the pit who had no idea, who thought they knew what they were doing, but you could tell they were kind of, you know, yeah, they were just. I remember a couple of guys that were in there, and when Well, my clerk would go check the trade. They had no idea who she was, and they didn't know what she was asking, and she was like having to explain everything. And then she's finally like, "Just give me your card. Let me see if I did the trade with you or not." She got a little, she got a little upset. So then she tells me, "Don't trade with that guy anymore." I'm like, "Just take it easy. Just relax. Just check it with him. I'll check it with him in the pit. You just check it with him again." Because most of the new traders don't have clerks, so you didn't, they would have to go to that individual trader and check the trade with them. So I guess she had to do a little extra step that she didn't appreciate so much. But then the guy didn't know what he was doing. Anyway, welcome to some of the new folks that are just maybe came into our trading room here. We are trading mini S&Ps. I know you don't think so because I'm just talking about nothing, but we are trading. And if we could put the levels up here, if you look in the chat box area, these are the levels that we put out before the market opened up. And these are the ones we're using as a guidepost to our trading today. We had first resistance up here at 85. Now we're coming up here and testing this 92 area. We're just kind of seeing what it wants to do up here. Again, if you got up to 91 and traded off, so if you're a little nervous about trading at 92, I get it. If you have to cancel it, I get it. Maybe you make a little bit of an adjustment. Otherwise, if you're risk averse, don't trade the level. We are trying to find those levels where we'll get a bounce off of. We believe that markets don't go straight up or straight down. Consequently, we're looking for those opportunities, those inflection points that gives us an opportunity to scalp the market. We're looking for about 2 to 3 points on our trades, depending on volatility and movement, and so on and so forth. And right now, we're definitely 2 to 3 points and solidly 2 to 3 points because nothing's going on. It's very, very quiet. And the market is up here on the vaccine rollout over the weekend. But again, it gapped up here. And the lack of volatility is only due to the fact that we're trading in December. And December is usually historically a very quiet month, especially the last 2 weeks of December, which is what we're coming down to here. There could be some news that could affect the market, mainly the agreement on some kind of COVID vaccine, COVID stimulus from the government, which they've been talking about since before the election. And maybe at some point they'll come up with some kind of agreement. So we shall see. They are supposed to go on their Christmas and New Year's break this week, and they need to come up with a budget. A budget by the end of the week, or else the government goes broke and they can't pay their bills, and that's not going to happen. So they're going to come up with something by the end of the week. It's just a matter of what and how much, if at all. And that'll give us another impetus to the upside, probably, depending on the size, I think. And then, very, very quiet from there. But we together a trading methodology that encompasses the levels that we give out plus the price action opportunities that occur. Price action opportunities are a little bit tougher trades to find, depending on, obviously, if we're moving or not, moving around or not. It's a little bit quieter, so it's not much going on right now, but that's okay. We were busy on Friday. We were busy last week a lot. Last week was a busy week. By Friday, we were tired. So things have definitely slowed down here a little bit. So not much going on here. And then, again, they probably have to come up with some kind of agreement this week. And then next week, Christmas is already on Friday, the following week. So it's going to be pretty much dead week. Pretty much, probably. I can't imagine after Wednesday or Tuesday anything's going to happen. And then we go into the week between Christmas and New Year's, which is going to be very, very slow. So we can see how things have, past this week, definitely going to get quiet in the market. Just kind of thinking ahead here. Kind of kind of telling you the lower expectations as far as how busy we're going to be getting. I'm sure things will pick up again. They always do. And you never know. We are in the midst of a crazy political atmosphere. So you never know when something is going to ignite the market one way or the other. Right now we have support down at 84. Anything below 82, you want to be out of any longs. I don't know if we're going to get there or not, but that's where a more reliable place to buy it is versus just willy-nilly anywhere. Even though we think we're going up, but we need to have a good reason to trade, and we always talk about reasons to trade and find the opportunities to trade. Those are it doesn't matter what kind of market we're at, we still need reasons to get into a trade. Right now that's the most viable place to get long. I mean, some of our traders have gotten long in other places here and took advantage of this little push to the upside, but either case, some are a little bit more aggressive than others, and that's fine. Nothing wrong with that. Everybody's got different risk tolerances, and so consequently we work with everybody and try to help you maximize profits, whatever your risk tolerances are. If you have any questions, please feel free to put them in the chat box area. If you put the question, just go to panelist only. Brad and I see them. So that's okay. So don't worry about any questions that you ask or comments. Feel free to put them in. As the vaccine people are going to get videos today of people getting vaccines, all nurses and doctors, whoever. The nurses, I think, are going to get them first. So they're sure today is going to be a fun-filled day for that situation to occur. As we are slowly, there's a little pop up there, right up to the 91.5 area. I don't know if we could have got in there 91.5. I don't know if some of you, I didn't get filled up there. Only 50 lots traded, 46 lots traded up there. It's a real shame. That is really a shame. Anybody get them? I mean, we scale into our levels there. We have 92, so I would put my order in at, again, some of you put in 91, some of you put in 91.5. Don, Mark said that you got 40 of the 46 that traded. We use it as a little guiding post to keep us on the right side of the market there, Sammy M. So the blue band is actually just a Bollinger Band, and it just kind of keeps us on the right side of the market. We found a way to use it for us to as sometimes support, sometimes resistance, depending on the situation. And then sometimes it also tells us not to do anything. But we found a way to use it to incorporate it into our work that we have. All right, so we got right up to the 91.5 area and only 40 lots traded. I don't think I did not get them up there. I had an order in there, so I'm going to have to adjust that one just a little, and probably go up maybe to the top end of the range, maybe a little bit. See what happens. Very, very quiet day. Not much going on. Kind of expected it. Again, these things happen when we're this time of the year. So it is what it is. All right, now it's coming off here a little bit. Again, support would be around the 84. Anything below 82 out of any longs. Uh, oh, you have the best patience in the world there, Don. Yeah, I get you. I understand. So we're coming slowly down here to the 84 area. If you're a little aggressive, you take that's where we're looking to get long. Again, being patient, waiting. If you're so inclined, if you're looking to get long, I mean, not everybody wants to. Everybody's got different views of looking at the market. So sometimes I was just saying that it's a good place if you're looking for that spot to get long. Otherwise, just look for the levels. The levels on the upside would be next level. Again, 92 was definitely toyed with a few times here. So that becomes a little bit risky. Only if you're a little aggressive do you take the area up there now. Again, you have to make adjustments, and that's what we do. Bonds, I don't know why they gap like that on the charts. That I don't understand, but they didn't gap like that in real life. So they are popping up here a little bit. So maybe adding to this little push to the downside here. Unfortunately, we did not get filled up there at the 92 area. I would have liked to, but just missed out. All right, coming down here to the 84 area. Again, anything below 82 out of any longs. As S&P, look at the bond market really popping up. Somebody's saying something, right? Gotta be. Something's up. Don't know what. You could tell by the volatility sometimes, or not the volatility, but the movement that something's going on. That doesn't really matter. If you have your stop in there, that's fine. You actually want whatever news is coming out to at least give you a chance to get in at 84 if that's what you're looking for, and then to try to be able to scalp it. If not, if you didn't want to buy them there, that's good. Then just wait for, really, we don't have any support till we get down to the pivot area there at 79. But something is up with bond market here. Going a little bit happy. Very happy in the bond market there for some odd reason. I mean, there are, they are. And we're always the last ones to get the news, by the way. I mean, the market will get it first, it'll react to it. And by the time we figure out why the market's moving, that usually is after the fact. Nobody's going to give us the news first so then we can react to it. But the reality is this, even if we did have the news, we'd probably react to it the wrong way. So that's my belief. I mean, I don't. Sometimes I know what the number is, and I still would trade it the wrong way. Is the point? What I'm saying. So our bonds and ES always inverse. Not always. They don't always inversely trade, but a good chunk. When there's a good move in one or the other, I think they would. Like I think bonds were up into 180 handle when the S&Ps. Before the S&Ps rallied to these 3,700 levels, so then they kind of broke off when we slowly rallied to a couple weeks over last week or whenever it was. So I think that on a whole, when you get the biggest move, you do get inverse trade between them. So sometimes it works into moment to moment, like like right now we're seeing the big bond move, and there's a little pressure here on the S&Ps, but if it has come down here to support, it's kind of holding. So, but if it's too risky for you and you see bonds rallying and you don't want to buy S&Ps, that's fine. You don't have to, but it's just sometimes it helps us stay on the right side of the market, even though this is the low support area that we have. And we're getting a little bit of a bounce here off of this 84 area. Very, very slow, but sometimes you just got to take what the market's giving you, right? Just it's giving you a point. Just take the point and just say, okay, well, it is what it is. Especially since the bonds are doing what they're doing. If you're trading multiple contracts, you get out of a little bit and see what can happen with the rest of it. But you know that below 82, you're out. I mean, you're a trader. You don't have to keep it for 2 points all the time, right? I mean, we try to, but given the market conditions, given the S&Ps are doing what they're doing, given that we've been here for a good 7-8 minutes and we're not getting the bounce we're looking for, you can make adjustments to your profit targets and also your adjustments to your stops too at the same time. And nothing's etched in stone here. Just remember that. You have to adjust to the market conditions. As far as it wasn't that bad. It will continue to downtick here right now as S&P's kind of relying on these bondos here to, bonds that are just continuing to rally big time. So there's something going on behind the scenes here that's affecting us. Quickly coming down here to the 79 area. Again, if you did buy to 84, you can see it hung up there. It got up to 85 and change, and then finally decided to break as the bonds continue to stay strong. If we don't hold the 79 here, we're looking at 74 as our next support level. And that did not get triggered initially, so good morning there, Maureen. How are you? Again, so we're getting a little bit of a rotation here off of our 79. To get our levels this morning, Maureen, there they are for you. All right. She's back in Colorado. Nice. All right, so nice rotation there off of the 79 area. First rotation back to our pivot, so nice little pop back there, and a nice rotation back up. So the 79 area worked very nicely. Again, the 84 area hesitated there for a bit, hung there. Again, sometimes you got to make a little bit of an adjustment, see what the market's telling you. You saw what the bond market was doing and how it was affecting us, so you maybe decided to just get out of whatever it was giving us a point. And then we went down here to the 79. We got a nice rotation back up here to above 81. So we got a nice little quick 2 points off of this little pop. And now the next support level we have is down at 74. We'll see if it continues to break through 79. You could have gotten short there. I said you don't want to be long above 82. Kind of also maybe a way to get short there below it. I mean, that was just on a price action opportunity there. And also this is where you can trade on momentum. We're not always trading just support and resistance. We also trade momentum trades, and we have to let the market kind of find those opportunities for us. And below, remember I said below 82 you don't want to be long. Could have made a case for saying, well, below 82 maybe I should be short, right? And that's a way to get a momentum trade going, coming down here to this 79 area. So you could have done it a couple ways. You could have got long there at 79, or maybe if you were a little aggressive, and again, you're doing it for a reason. We saw what was going on in the bond market. We saw that it broke support, and probably what was going on is that you were getting some people running to the exits, and that 82 was the area where they were going to run through. So you needed to find those areas, and how you find those areas is what we do as far as our work is concerned. And so what we're trying to do is we're trying to teach you these price action areas that the market creates. We don't make them up. We're only dependent on what the market tells us. So next level of support here is the 74 area. It is testing the pivot here at 79. We had a nice rotation there off of it a little bit ago, and I'm just now kind of just hanging here and trying to figure out, are we going to continue or not? As bonds continue to go up, they are definitely adding to this little rotation here to the downside. Nice little rally there in the bond market. And sometimes, like I said, sometimes we get the inverse relationship going and it's intraday, and then sometimes there's no reaction to bonds, and S&Ps kind of do their own thing. So you never know. We were just doing nothing, and bonds were doing nothing, and all of a sudden something happened over the last 10-15 minutes. It's created this little push here to the downside in the S&Ps, and then conversely rallied in the bonds. All right, bonds here continue this real impressive move up here to and S&P's getting all S&P's staying a little bit under a little bit of pressure, but they're not. They've stopped their move to the downside. So not that I can find, as far as any news is concerned. But you never know. I'll look again, see if I can find something. Again, we're always the last ones to know as far as any news is concerned, but it does seem to hold here. The 70, the pivot here seems to be holding, even with this rally here, a continued rally. In the bond market, that is. So remember, the thing that's holding the market back here, the lack of any kind of agreement is going to yield to a shutdown in the government if they don't approve something by Friday. And given that Friday is the day that they all want to go on their vacation, God knows you're not going to stop the Congress from going on vacation. That's for sure. They're going to come up with something, right? You would figure. So it seems like the pivot here held very nicely. Again, we had a little bit of a rotation earlier, and now they've tested it. Even though bonds are on their highs, they've bounced off here a little bit. All right, well, we're just kind of hanging around the pivot, trying to figure out which way we're going to go. Next level on the downside, we have support is at the 74. We suggested if you wanted to get short there, it's below the 82 earlier. Right now, there's some resistance around the 485 area. So 74 is the next support level on the downside we have as the market here continues to downtick. Again, I can't find any reason right now, at least for the time being, why the market is, bonds rallying and S&Ps here downticking, but 74 here is the next support level. Coming down here quickly to the 74 area. Again, whatever we do, we have our stops in. Doesn't really matter if it goes through or not, because we're going to be ready with our stops, and we're trying to scalp the market. So whatever is creating this volatility here to the downside is at least giving us the opportunity to trade. Whether we make money or not, we don't know, but we just know we have the opportunity here, and we keep our stop in no matter what. Definitely a little bit of pressure here on this market. Don't know why. I'm trying to find out, but I can't find anything on the news that I've got here in front of me, which is not much. So before we couldn't try to find a place to get long, and now we can't get a place to get short, and the market completely reverses its opinion, which is what happens as bonds also on their highs here. All right, we continue to downtick here. We got stopped out. That's all right. We'll look for our next possible trade here. So again, I can't find any news as to why bonds, nice little rally, but they're finally coming off here a little bit. So if you did manage to hang in there with this, you're given a chance here to at least get out of some of it. Let's see if we can get a little bit of a push back up here, especially since bonds have come off here a little bit. Definitely lighten the load if you didn't get out below. Now we're trying to give a little bit of a bounce up here. Again, we did spike down to 71 area. So if you did get out, I get it. And now we'll just gotta slowly see what it wants to do. Yeah, that was the short area initially there. If you did get short below the 82 because of the way it was the price action, the level of support. Once it got through there, pretty much bounced through and it never got back up there to give you a chance. You're right. All right, we are getting a little bit of a push here off of this push down to the spike low there and then come back up here. I know it was a little tough to kind of stay with it. I get it. If you got stopped out, I totally get that too. And if you just lighten the load here, that's also a good possibility. As bonds finally trying to turn over. Well, as soon as I say that. So, all right there, Steve, good day for you. Take care there, Sammy. Well, we're not trading the D's there, Maureen. We have shifted over to um, March. So that could be a reason. You got the March numbers. And we shifted over on Friday. We traded March. Well, that's when it expires, but uh, you don't want to wait till then to change over. Usually they change over like 2 weeks before. So they change over 2 weeks before, lets the market and people who have positions have give them 2 weeks to shift over positions. But that's why they do it 2 weeks before. So, all right, bonds there. S&Ps continue to downtick here. Gave you a little bit of a chance there to either get out or take a little bit of a profit. And now we're swiftly come back down here to the 67 is the next support level. Whatever news came out that created a huge bond rally has created this little push here to the downside. And again, this is how we can try to use bonds here to help us. Sometimes it works out very easily like it has right now. Other times it's not so clear and straightforward, but because of the big move, we're finding it. Again, we were trying to get you short there below the 82, and then if you did get short there below, well, we had support at 74, so that was a little bit of an issue for us in regards to because it went down to the 71 area and then popped back up to 70, almost 76. And that continues to downtick here. We got the 67 areas, next support level. Our green band coming in there at 4.5. Oh, double bottom there at the 68 and change area. Came flying Mike up here. Kind of missing our entry points by just that much today. Oh, well, the good entry points anyway. Bonds, though, look at the bonds. They are just continue to push up here. Resistance would be around the 82 area if we do get up there. It's a nice little push here. Again, we're looking at 67, got down to 68 and change, and then came back up here. So just missed out on that one. Nice little push back up here. All right, again, resistance would be up around the 82, 84 area. We had support at 67 and got down to 8 and change, and popping back up here again. And so we're missing our, we had 91 on the upside, got up to, we had 92 and got up to 91. So we're missing our entry points by just that much today, which is fine. We're not going to be perfect. All we can do is try to trade around it. Again, it all depends on how you enter your trades as well. So that's another factor in using our levels. Everybody's got different risk tolerances, so consequently entering and getting out are different for everyone. Not everybody trades the same way. Consequently, we work with everybody to try to maximize profits based on your risk tolerance. Can't, it's like, how can you be mad about making money? I always keep telling you, you get upset because you got out too soon, but you never remember the times when you got out perfectly, and you don't remember that time when you get out perfectly and you minimize your loss or you maximize your gain.
because you did it's in your head you did the right thing. But because you got out too soon and the market continued to break, doesn't mean that you should be upset. It just means that you made the right trade and you got out where you thought it was going to stop, and the market told you at that point when you got out that this could be it. Like I said, if we knew one time that what the market was going to do, we wouldn't be here every day. But we don't. So let's not get carried away by making 4 points instead of 6 points, or 8 points instead of 10, or whatever whatever your dimensions are. But just be happy that you saw the market for what it was. It was kind of breaking. You took advantage of it and you made money. And again, if you got out and the market stopped where you thought it was going to get out, and rally, you wouldn't even be like sending me this text telling me, "Hey, I got out at the perfect spot. I was so good. I got short. I got out at the perfect spot." You're never going to send me that text, but you're going to send me the text, "Oh, I got out and the market continued to go my way." So every time somebody tells me that, that's the story I tell them. And it doesn't get old because everybody tells me that story. "Oh, I got out too soon." Yeah, I mean, I agree with you. Uh, it wasn't enough. Just the grass, the snow on the grass. It wasn't the didn't really accumulate that much. But the grass got a little dusting. It was kind of whitish, and then the sun came out. Actually, the sun didn't come out, but it just got a little warmer. It was rainy all weekend. Not fun. No, no. The beaches are closed in Chicago. Yes, we do have beaches in Chicago, but they were closed. Sorry. Yeah, well, that's what happens in California when when your governor shuts down the state. No, we were in that partial shutdown that the governor suggested that we go in a partial shutdown, and actually, it's worked very well. The numbers were a lot worse about 3 weeks ago when he suggested that we should go in a partial shutdown, and so did the mayor. Even though a lot of people don't like the mayor here in Chicago, she did the same thing. She suggested partial shutdown. The bars close like uh, after 10 or before 10 or whatever, uh, and um, and so we our numbers have gone down from like a 14% rate down to less than 9 in the 3 weeks following. So that's pretty good for Illinois anyway, compared to the rest of the country. At least our numbers are going in the right direction. But they were worried about the hospitals, and it's not so much uh, in the urban areas as they are in the southern part of the country where there's not that many uh, hospitals and people are getting sick down there quickly. So that was a big issue. So it's not like we're going to open up, but at least doing. And anyway, we're the thing is it's cold here. It's not like people are going out. Well, you guys don't care. You guys don't listen to rules. You guys do whatever you guys want to do. Well, not you. I'm saying your group out in California there. All right, we got again. We were looking at the 82, 84 areas of resistance. Slowly snuck up here again. Be a little bit careful there around the 67 area. Green band coming in there at 65. Look around that area there for a little bit of support, maybe 60, lower end of the range, 66 and a half maybe. Just to make up for this little earlier slot down here to 68 and a half area. And then if it's too risky for you, then just wait. We've had to work today. Did not today was not one of our easier days. We've actually had to work around trades. You've got to get in and work a trade that wasn't giving us the reaction we were looking for. We had to adjust a little bit, maybe take less, maybe scratch it, watch it go against us, the drawdowns, and then come back and we suggested, get out for a scratch. Happened in a couple, so it hasn't been very easy today, but that's okay. Yeah, stuff happens. And so they said that the stocks have slid as New York mayor warns of prepare for a possible full shutdown. Full shutdown. I am flat, right? So there was a little concern. There's concern there from New York City that seems to created that little push here to the downside. So that's finally get the news. I was wondering what was going on, but again, we're always the last to find out these things. Remember that. And then you're always, that makes sense. All right, there, Mark, you take care. All right, we're going to coming here down to the lows here. Again, we've got the 67. Again, make an adjustment a little bit down to, is that 66 maybe a little bit better than the 67 only because of the price action. But if you are going to not take it at all, I get that also. So those are the choices that you have as a trader. You don't have to take it based on the price action because maybe we should have got it the first time to it. Instead, we didn't. Again, so we come here to the 66 area, which maybe I suggest that we make an adjustment to. If not, then that's fine. If you're going to wait, I get it. Again, because we missed our entry point initially, we're getting this follow through trade, which makes sense. And that's why we suggested that you don't take the trade if it's too risky for you, or maybe adjust your entry points a little bit so that you can take advantage of the fact that we're definitely gotten a little more pressure on the market. And again, you have alternatives here. You do have choices. It's not like there's not like one situational thing that's right or wrong. It all depends on everybody's risk tolerance. Again, we suggested making a little different entry point there to keep us in the game a little bit better and to give us an opportunity to make a little bit of money as we are quickly coming up here off of, if you did get in at around 66 or 65. And again, there was a reason for it. It wasn't like we were just adjusting for the hell of it. We are adjusting for a reason. And we're quickly bouncing off here very nicely off of the adjustment there against the 67 area. Again, these are logical changes in what we were trying to do, and it was based on price action. Right? I mean, these are not just changes that we made because felt like it. We were changing it because of the price action and what the market was telling us. So hopefully we entered at a little better entry point, and we're able to take advantage of this little push here to this little final, this in the next rotation here to the downside. And again, if you definitely the 67 was a risky, and we suggested 65 or 66, and we're getting this little nice rotation here off of that adjusted entry point. All right, so nice little adjustment there. Hopefully you're able to make the adjustment and make the rotation a little bit lower on the entry point, and then I gotta get up here to 68 and get out on that nice little trade there. So that this one again, you gotta make adjustments to the market, and the price action was dictating the adjustment. All right, so nice little rotation there. Again, we have to see what the market's telling you and make the adjustments accordingly. And we did have a little support there around the 67, but because of the price action, the way the market was trading, we had to make a little bit of an adjustment there to our entry point, a little bit lower. And we talked about it before it happened, and then that kept you in the game. Didn't let us get stopped out, and we get a nice little rotation here off of that along down there. As against our green band there, which could have gotten at 65. If you did even get lower than that, that would be even better. But 65, 66 was the adjustment. And hopefully you were able to do that. And then obviously stay with it a little bit here and you get a nice rotation up. All right. All right. So we walked this through again. It was we had to work today a little bit, but hopefully you were able to adjust a little bit and take advantage of the trade. We had to walk through some trades today. It wasn't as swiftly, or sometimes that's going to happen, that we're actually going to have to work a little bit around the levels and work around the trades a little bit. Hopefully we were able to do that, as the market is a little concerned about New York's governors telling them that they might have to have a state lockdown. So that's coming into a play here a little bit as COVID continues to put havoc not only on everyone, but also on the market as well. Any news from Washington in regards to the stimulus agreement is going to create some volatility also. Any lack of news will also create some volatility, so keep that in mind as well. Resistance would be back around the 82 to 84 area. Anything above well, 90, you definitely don't want to be long. Tighter stop. If we get above the 80, 70 area, you want to be out of any shorts as well. All right, get back here in a little bit.
As we're winding down the morning session here, a few programming notes. I had a couple quick shout outs going in the morning. It was interesting to see how lively everybody was when Saul stepped in, but sort of so quiet in the background as we go through our morning together and set up for the trading day. For those that are part of Saul's monthly, thank you. For those that are part of Saul's class, his mentoring service, thank you. For those that haven't signed up yet, I'll send out the invitation to do so. If you find that all of a sudden you're exited for whatever the reason, I'm going to give you out our telephone number. Telephone number in Chicago is as follows, so make sure you write it down. 312 685 2582. That's 312 685 2582. That's right, Wayne. Thank you. I'll send out to everybody the opportunity to sign up for Sol's Monthly. Right now it's $100 versus $379. Those that are coming in that are new, welcome, as guests. We send it out to everybody so you have the opportunity to be part of it also. I'm going to send it out to panelists and attendees. Hey, Peter O. I'm not sure if you heard me this morning. I think you might have, because as soon as Sol popped on, you gave me the word. We sent you out an offer and an opportunity. Just let me know if we're on the right track here. Just want to make sure that the opportunity that he gave is something you still want to participate in. Hey, Wayne D, I think you're part of Sol's Monthly. So let me know back in chat. Norm BB, I did reach out to you last week a couple times. Let me know what you're thinking. I did just send it out to you. Michael S. Michael J. Marvino. Hey, Marvino, I'll send it out to you. So, Wayne, what are you waiting for? I'm always interested in finding out, what people are. You go from 379 to 100. I think what we'll do is, why don't we give everybody to the end of today? If you're not in on the 100, then it's going to be 379 per month. So we'll just take the 100 away. For those that are fortunate enough to get it, that's a good thing on your part, and that's very smart. For those that are delaying, that's okay. I don't mind collecting the extra $279 a month for Sol. But riding the pony or the fence is probably not the wisest thing to do right now, considering how much you love Sol. I want to be part of his world. So let's do it that way. So I just sent it out to everybody. You got it. Write down that telephone number, the 312-685-2582. If you're not signed up by the end of the day, then you'll be frozen at 379 for the future. We may give specials from time to time, but we'll have to cross that bridge when we get there. For those that are joining us on the outside, join us on the inside. You want to learn how to scalp the market, develop a price action trading technique that can lead to consistent profitability, you're in the right place.